from the CNBC TV 18 headquarters in Mumbai.
Good morning. Welcome to Morning Call. I'm Lata Mkts, with me, Sonia and Anuj. Well, I would have liked to say a good morning and hoped that the first effective trading day of 2016 would have started on a better note. But to look at the red on the screen, Kospi and Taiwan down 2.5 and 1.5 apiece. There are some markets with even 3.5 lower. It's a tough start to the first effective trading day of 2016, and the impact has come clearly from China. The Chinese PMI index, what you now call the Caixin Manufacturing Index, has come in at 48.2 compared to 48.8 in the previous month, or 48.9 in the previous month, and this makes it the 10th straight reading of contraction and of lower numbers, clearly indicating that the second largest economy and the biggest engine providing incremental GDP to the world is by no means able to rev up. And this comes in a context when things have not been very good. The Dow Jones itself has lost the second year that it lost in 2015 after 2008, which was anyway a troubled year. We also have over the weekend some trouble being reported from the Middle East, with Iranians storming the Saudi Arabian embassy in Tehran. This is a fresh spot of trouble. It's unlike the Syrian trouble. These are two very big oil-producing companies, so that itself is not very good news. At the moment, the oversupply in the Brent market is so much that maybe even these hotspots are not going to impact crude prices. But nevertheless, as you can see, it's about 1% higher Brent. It won't affect WTI so much, but it is going to affect Brent. We hope it doesn't scale up in the ugly manner in which it appears to have brewed in the weekend. But that's again a spot of bother. But the bigger problem really is growth. The Chinese numbers are bad, and as I think Sonia will elaborate, the auto sales numbers were really nothing to write home about. Whether it is two-wheelers or whether it's four-wheelers, it's a real spot of bother. Consumer demand is simply not picking up.
Oh yes, hi Lata, good morning. And now as we speak, China's cracking further, so it's almost a 4% slide that you're seeing in the Chinese markets this morning. That's pretty gruesome. In terms of the auto sales, yes, as you rightly mentioned, now it's all boiled down to low single-digit growth. We were working with high single-digit growth as of last month, but now the two-wheeler makers, some of the passenger vehicle guys are all seeing low single-digit growth, so that's not a good sign. But Anuj, morning, last week was not too bad. We saw the markets rise about 1.5% or so. There was a bit of hope that 8,000 could once again be scaled up. But this morning we wake up with negative global cues. So do you get a sense that that hope perhaps could be dampened?
Morning, Sonia. All through last week we kept saying that don't base your market reading or don't base your market view on that week, because this was a week in which the participation was not there. I'll just give you one normal statistic. On Friday, the FI cash market volumes were as low as the Muhurat day. So technically they were not there. They were half of DI volumes. So the real test of the market will begin today. As of now, the SGX Nifty is indicating that if we get away with what the SGX Nifty is indicating, that's good news, because most of the Asia is down 2 to 3%. On an average, Asia is down 2.5%. 2% for Nifty means 160 points. Simple as that. So if we get away with 40-50 points, we should be fine. My sense is that we may not get away with this kind of cut, because the cuts are real in the Asian markets. And anyway, we've seen a bit of a rally for our market, so there's a good chance that there would be temptation to book some profit. There would be a bit of a fear factor as well, because of the way the Asian markets have fallen. There was also some put buying at 7,700 and 7,900 strikes, but I won't read too much into that as well, because as I said, I won't read too much into last week's data. Today's onwards, the data will be interesting to watch out for. What I would really look at is the trading exuberance on Friday. That on Friday, all 50 traded stocks, top traded stocks ended in the green. There was no red. Not a single stock was in the red. All top 50 trades were in the green. You know how many stocks hit upper circuit on the BSE on Friday? 477 stocks. 477 stocks hit upper circuit on Friday. And you saw select mid-caps really running amok, Jet Airways, couple of others. And my sense is that they got into exuberance zone. It's time to not overstay your welcome. And some of these mid-caps may see correction. But as I said, the real stress will start today. If today the dip is bought, then traders should be really happy that this is a buy on dips market.
Okay, but let's see if that happens, because the news coming out of China has been received very badly by the markets. It perhaps is not a huge fall in terms of the PMI, but the markets have reacted extremely negatively to the Shanghai news.